Okay, we are back. I'm your host, Barry Waxler, here with the always lovely and talented Andrea Kay, the always incredible Urban Miaris, and we have our first in-studio guest of the day. Welcome, Christian Marabella from
Hey, Barry.
Marabella Commercial Finance.
How are you doing?
Good. How about you?
I'm doing excellent. Doing excellent.
So tell us a little bit about Marabella Commercial Finance. What do you do?
So Marabella Commercial Finance was, we were established in 1970. My father, Don Marabella, started the company, and we did about $100 million with Safeway stores as principals, structuring sale-leaseback transactions. And in 1995, I came into it and started to do brokerage, arranging financing for 1031 buyers that are buying these type of net lease properties that are very popular at this point with landlords that are looking for tenant-friendly properties. Landlord-friendly properties.
Well, tell us a little bit more. What is a net lease property?
So a net lease property, the tenant takes care of the insurance, the maintenance, and the taxes. So the landlord pretty much doesn't have to do anything. It's a no-brainer for landlords that owned apartments or they're older people. They want to get involved in something where they can do a 1031 exchange. Right. But at the same time, they can just kind of coupon clip. It's kind of like a bond. Mm-hmm. Whereas, in other words, you get a cash flow, but the tenant does everything.
Right. Yeah, I just sat through a session over there the other week with the Southern Cal Institute and how all the presentations by the 1031, what do we call them, accommodators? Accommodator, right. Yeah, so it's interesting what goes on. There's so much 1031 exchanges because we have, I'm assuming 1031 exchanges there because we have such greatly appreciated properties.
Most definitely. And a lot of the baby boomers have inherited a lot of real estate, apartments and actively managed type real estate. So those people are now being thrown into the 1031 exchanges. Okay. And so these properties are very popular. What's happened in the net lease market since when we first started in the 70s, one, it's become more transparent, more efficient, and it's a broader market now with the advent of CoStar and LoopNet. The average person can kind of get involved in the net lease market.
What's CoStar and LoopNet?
Okay, so LoopNet and CoStar are online sites where these properties are traded. Okay. So back in the 70s, basically nobody knew where the cap rates are. A cap rate is basically how they figure out the income of the store. If you're selling a store at $5 million and the cap rate is 10%, then the rent would be $500,000. Right. And the tenant will do like a 20, 25-year lease with options. Back when there wasn't any of these online sites, so you really didn't know where these were trading at. Mm-hmm. Now with LoopNet, it's become a much more efficient market, more transparent, so the cap rates have come down and the prices have gone up. Just it's similar to like trading a bond. There's an inverse relationship. As the interest rates go down, the bond goes up. Right. Or vice versa. That's the same in the net lease market.
Okay. So you're doing strictly the financing on these properties? Financing, cash out, sales?
Exactly. I do strictly the financing, and we do the permanent financing, construction financing, preferred equity for developers, construction financing. But we have preferred agents. Right now, what's really hot are the off-market properties. Right. Because what happens is buyers go on to LoopNet and CoStar, and even though those properties are there, there's a lot of bidders for those properties. Right. So a lot of buyers are looking for those off-market gems that nobody really knows about. And we have agents, our agents that we work with that have those type of properties, the Walgreens, CVS, Jack in the Box, 7-Eleven.
Right. Well, it's interesting, and I think back to my financial planning background. We talk about the 1031 exchanges and why people, the difference, it's not a matter of just why people want to do an exchange or keep the property. You get somebody who's getting older, they're in their, be it 60s, 70s, 80s, what have you, and they have all this big block of real estate. Why do they want to keep that real estate, versus sell it and take the cash and run? Christian, why don't you expand on that? Why, what's the biggest reason why people getting older hold on to all that real estate?
So basically, what's happening right now, if you go down to Wells Fargo, how much do you get on your money? Less than 1%, right? So there's been a disintermediation. People that want to continue to own real estate because you can defer your taxes for the 1031. And then if you pass on, you get the stepped up basis. So you end up never paying any tax.
Right. So you can take the property, you can gift it, will it, put it in trust for your kids or your grandkids, and they can get the fruits of your labor and not have to pay the tax. You buy it for $1 million, you sell it for $5 million, because you've held on to it long enough. There's no tax on the gain as long as it translates into, it goes over to your heirs, correct?
There's a couple different property rules. Okay. There's the 3-property rule where you can identify 3 properties within 45 days, and then you have to close 135 days thereafter.
Right, that's the 1031.
So a total of 180 days.
Right.
If you do that, then, you're going to defer your tax. The nice thing with the net lease properties is the tenant takes care of the insurance, the maintenance, and tax. So if you're selling apartments, if you're an older person here in San Diego and you're selling apartments and you want to sail off into the sunset, you want to retire and have security, this is the perfect vehicle for you because you don't have a lot of time to find these 3 properties. You only have 45 days. So that means that if you tried to get a property here in your backyard in San Diego, it would be very difficult. But since your whole area or footprint that you can target is the whole United States, you can buy a net lease deal in Oklahoma or Texas or wherever because it's triple net, as long as it's truly triple net.
So you're saying you're finding like properties to exchange and they go into the 1031 accommodator and the accommodator figures out how to do all that stuff.
But your probability of finding a property just went up dramatically because now you have the whole United States to find something, whereas if you had to buy management-intensive properties here in San Diego, you would be, the prices are very high because there's barriers of entry here in San Diego. The real estate, the land, is very expensive, whereas in those other states, the land is less. So what's happening, it's an export of money. People are exporting from California to these they're going east.
Right.
And buying properties in the east.
Interesting. You're listening to Close Up on San Diego Business here on KCBQ, streaming live at AM1170theanswer.com. Give us a tweet at CloseUpSD. Email me at barry@closeupsandiego.com or find our page on Facebook. We want to hear from you. I'm your host, Barry Waxler, here with my co-host, Andrea Kay, Urban Miaris, and our guest is Christian Marabella from Marabella Commercial Finance. So
now, why so much focus on straight commercial properties instead of multi-use in what you do?
Well, a lot of landlords get tired of deadbeat tenants. I don't know if any of you guys own any rental properties, but the main complaint that I hear is that people are late on the rent. They don't pay the rent. I got to go evict them. There's a plumbing,
which is hard to do.
There's a plumbing problem. It's New Year's Eve. It's Christmas. My tenant is calling me, hey, the plumbing broke in the slab. I've got to go hire a guy to jackhammer the slab, fix the pipes, pull the carpet back, get a guy out to dry off the carpet, move the tenant out. And I don't want to deal with that anymore. I'm maybe, 50 to 80 years old. I want to travel. I want to be with my wife. I want to enjoy my retirement. I don't want to have the responsibilities of actively managing a property. With this, I can get involved with an investment grade credit that's BBB minus rated or better. So the probability of lease default is very low, and the tenant's going to maintain everything. And I can if I want to go to Italy, if I want to go to Hawaii, I know my rent's going to come in, and I know that I have the security that, and I'm making about 400 to 600 basis points more than I would in the bank right now. That's the main thing. And there's a lot of people getting to their retirement age, and I just saw a study. They said that too many people are in stocks now. There's too much of their money in stocks.
Never.
You agree with that, financial planner, boss daddy?
Keep talking about all
you just
this
struck blood right there.
I'm just
he's going to pound on me now, but
no.
That was something that was on CNBC.
Right.
So don't blame you for that statement, right?
Stocks are great. Don't get me wrong. Stocks are great for appreciation, but at the same time, you got to live. It's not, the stocks are meant for appreciation. Well, this is meant for income.
Yeah, and I'm a firm believer in diversification. Okay, if you have all of your money in real estate, no matter what it is, you have no liquidity, you have a problem. If you have all your money in stocks and what have you, you have a problem. Okay, you need to be diversified.
Exactly.
So tell us, let's talk a little bit more about the technical side of what you do. When you're doing financing, the market had to have immense changes, back from 2008. All the banks crashed. Where's the money? Where does the money come from to do what you do? And what is the greatest challenge that you help people overcome?
So basically, if you look at 2009, the biggest thing that affected the financial markets was the CMBS market.
Okay.
I don't know if you're familiar with commercial mortgage-backed securities, but what happens in the commercial mortgage-backed security market is that nobody was buying the paper.
Right.
So we had a real credit crunch, as well as the banks. There was a mini run on the banks.
Right.
So at that time, if you came to me, even if I wanted to finance your deal, CMBS was just pretty much halted. There was no money.
So you needed to have a portfolio lender that wanted to hold that paper, and there weren't many.
Exactly, and there still wasn't many portfolio lenders. And what happened is the rules of the game had changed. We go off of minimum debt coverage. Right now, they're back down to like 110 to 130. That's the rent divided by the mortgage payment cannot go under that. And in a net lease deal, our rent equals our net operating income. It's the same thing.
Right.
Well, what happened during the credit crunch is that went from 110 to 130 all the way up to 140 to 150. So the rules of the game had changed, and you had a lot of developers that were building my kind of properties that the construction loans were underwrote on a takeout.
Mm-hmm.
And so when they got those, it takes maybe 3 years to develop these kind of properties. So when they start their construction loan, they underwrote at a 110 to 130 minimum debt coverage. By the time they were done with the project, the takeout lenders were at 130 to 150.
Right.
So they couldn't take out the loan. Those people were upside down.
Okay.
So basically, they sold at a loss. And so there was a lot of brain damage. When I went to the International Council of Shopping Centers in Las Vegas, there was a lot of depressed developers walking around at that time.
There had to be a lot of tenancy issues. I mean, back in those days, I remember a lot of the department stores were going out of business, and a lot of big business was going out.
You had a perfect storm, a trifecta.
Yeah.
1, there was no liquidity. 2, tenants weren't expanding. 3, you had developers that were hurting. They weren't making the money that they had been. So then 2010 rolled around, the liquidity came back, CMBS market came back, and then we started hitting on all cylinders. Okay. And from 2010 to now, everything has been good. Property values are going up.
If I wanna buy a property, I understand in the residential side of finance, you want to buy a property, you really want to look at a 20% down payment. You want to look at things. It's a fairly well stated market. What's it like in commercial finance?
So basically, with the 1031 market, I'll get calls. People they normally have 2-3 million in their accommodator. And I'll tell them, hey, you may want to be a little more conservative. Go into something maybe 6 million, 7 million, put 50% down. And it also goes back to the 1031.
Right.
Because,
Well, you don't do it. And now everything is not 1031.
Not everything is 1031, but it's like playing golf with somebody that has a handicap.
Okay.
Those people have a handicap over ordinary investors.
Okay.
So the majority of the people that we see are the 1031 buyers.
Makes sense.
An investor, they may consider going into apartments where they get a little more return if they're investing. But a majority of the people that are buying these are the 1031 buyers because they have that handicap. They can afford to pay a little bit lower cap rate, higher price.
Right. Okay. So if I did want to purchase a new property, what kind of down payment? What are the banks or the finance companies looking for as down payment on a new property?
So just to tell you, we closed a PNC bank at Christmas.
Okay.
I did that during Christmas time, and I think we got up to like 80%. That's a certain kind of loan. I have many different type of loans.
Right.
It's like kind of if you go to Nordstrom's and you go to buy some shoes and you go in, you say, I'm going to a formal event.
I stay out of the women's department.
No, but see, now I'm finally understanding the conversation.
I know. We brought it into your
I'm going to give you a metaphor here. Okay?
Yeah, okay, good.
So you go into Nordstrom's and you tell them, hey, I'm Catholic. I'm going to church or I'm going to a business meeting, and the guy brings out penny loafers. Mm-hmm. Okay. Now, if you told that person, I'm going to play tennis, I'm going to go walking, they're going to bring out tennis shoes. It's the same with me. What I do is I sell money. Right. So what I try to do, it's just like you as a stockbroker. I try to know my customer.
Right.
And I ask all the right questions so that I can structure a loan that makes the most sense for them. My business is really prioritization. The client may come to me and say, you know what, I really want a non-recourse loan. With a non-recourse loan, the lender can't go after that person for a deficiency judgment. Or they may say, you know what, I want a 30-year amortization, and I don't care. I'll go for a 5, 7, or 10-year fixed. I really don't worry about a balloon payment because I've got a high net worth. I've got a lot of liquidity. Or they may say, you know what, Chris, I want to own this property free and clear. I want to do a 25-year self-liquidating loan with the lease so that when the lease expires, I own this property free and clear, and I don't have to worry about re-tenanting it. Or let me go back a little bit. I don't have to worry about a balloon payment. I own it free and clear, and if I have to re-tenant it, all I'm going to have to do is pay the insurance taxes, pay tenant improvements, and leasing commissions.
Okay. Well, we're starting to run short on time. I will tell you one thing, and then I want to get everybody to get your contact information. But the one thing I just got done setting up was a client came to me and said, I've got this apartment building I want to buy. I want to buy it. I want to use my retirement plan to do it. So I showed him how to use the retirement plan, got the loans, the funding direct to the retirement plan. You mentioned it in non-recourse financing. He can then use it and take the income from the income stream right out of the retirement plan and not have to worry about a lot of the self-dealing issues the way they were trying to go about it. So those are things we have a lot to talk about.
Yeah.
Okay. So before we go, give our listeners your contact information. How do people find out more about Marabella?
So we have the website, www.marabella.finance.com. And the nice thing with the website is that you can access it anytime. We have the rate sheet there. We have our video feeds in our About section, which is Net Lease TV. These are feeds that we did at the Walgreens booth, CVS, Jack in the Box at ICSC in Las Vegas and San Diego. And there's a plethora of information you can get off the website. And then you can call me anytime, 7 days a week. I pride myself on anybody calling me anytime.
Well, you better get that phone number out there.
And they can text me at 760-803-6464. Again, that number, 760-803-6464. And you can text or call me anytime.
Great. Well, we are ready for our next break, but Christian, I appreciate you being here. We have a lot of things to connect up. I look forward to talking to you and bringing the storyline back on air.
All right. Thanks again, Barry and Andrea and Urban. Thank you for having me.
Great. This is Close Up on Sunday Go Business here on KCBQ, streaming live at AM1170theanswer.com. Send us a tweet at CloseUpSD or just find our page on Facebook. You can always email me at barry@closeupsandiego.com. Let me know what you think. I'm your host, Barry Waxler. We'll be right back after a word from our sponsors.